Hi, this is Zach here with the Bulletin Board Heroes. It is Tuesday, the 7th of March. Starting off with the FTSE 100, where we've had good support there at the floor of that rising channel there from the end of September, rather. The line there around currently around the 79.10 area, which is excellent in terms of the near-term support. And above that, we're looking for a break of 79.80 rather, which was the resistance last week, to take us through to 8,200 as soon as the end of next month. Ideally, obviously, be the end of this month, but maybe there's not quite enough time left for that. But as we said, a lot of consolidation at the higher levels, which is very encouraging, and we're largely above, and we've been largely above the old 78.80 resistance from last month. So that is a plus. Old resistance becoming new support. So 8,200 certainly on the cards there by the end of next month, if not sooner. RSI right in the correct place as well, just above what's around 56 at the moment. Almost perfect really for as a continuation signal for a new leg to the upside. If we do break down below 78.80 or so, then we've got the risk of move down to the 50-day moving average at 78.10. But at the moment, that seems to be less and less likely, especially with that post-October uptrend line in the RSI window, which is quite a big feature now. Moving on to the DAX, which has built on the gap higher that we had on Friday. Very impressive actually to see that, and the longer we stay above 15,600, the greater the chance of a move to 16,000, which is an early September resistance line projection. Above that, we're looking for as high as 16,700 by the end of next month, maybe 16,000 sometime during March, but really impressive to have an unfilled gap to the upside on an index and also at the highs. At this stage, only back below for the gap there around 15,300 would risk a test or require the test of the 50-day moving average back there at just above 15,000. Haven't been below the 50-day moving average really since the beginning of the year, so that's pretty impressive stuff on the DAX. The weaker part of the trio, the indices trio, is or has been the Dow. Here we had, I suppose, what was a bear trap below the January support, so below 32,900, or so below 33,000. Above 33,000 now, we're looking for a target around 34,200, which was or is a one-year resistance line. If we can break that, which is obviously dependent on the Fed chairman, then we have the chance of a big breakout towards 36,500 at the top of that rising trend channel from September. What is positive at the moment is the way the 50-day moving average has started to push up. We've got the market just closing above the 50-day line, which tends to be a decent signal in its own right. So I'd like to see the RSI back above 50 in a meaningful way. I think it's right on 50 at the moment, but can't have everything. And we have already had a bounce above the rising 200-day moving average around the 32,300 level. So if this wasn't the Dow, if it wasn't so miserable in terms of the interest rate outlook, one would be looking for a decent move to the upside, if only on the basis that the 50 and 200-day moving averages are now both rising in parallel. Not such excitement for the crypto area, where Silvergate has rather ruined the party for March. It's done a mini FTX, but interesting, we've got an uptrend line there from January. That's around 22,100. Above that, still got a chance of a break through 25,000 and then a move up to the top of that broadening triangle from June, which I've been talking about like a broken record for the last couple of months now, I suppose. Below 22,000 of that area, looking for a test of the 200-day moving average at 19,800, and we might have to see that just to get the bearishness out of the market system, a bit like we saw with the Dow. Even though it was underperforming the other indices markedly, there had to be that dip down towards the 200-day line just to shake out the weak hands. Moving along to the stocks, and starting off with a stock which I covered in a little article last night, first class metals. We had the break of the 50-day moving average, that December resistance line, and had a key reversal up yesterday, so that was pretty impressive. We got the 200-day moving average currently rising around 12.75 pence. That is a continuation signal. We've had a bullish divert, well, at least an uptrend line in the RSI window. And the longer we stay above the 50-day line around 13.9 pence, the greater the chance of a move towards the August resistance line projection from last year, currently pointing at 22 pence plus, looking for that by the end of next month, especially while we remain above the 50-day moving average. So a nice new setup there for first class. Moving on to a stock which has been rather in the wars over the recent past, but maybe we bounced off the falling support line there from this time last year. That was around the 8.5 pence level. Bounced on that yesterday after the overshoot to start the month, and an end of day close back above the bottom of the gap there at 9.9 pence. Could and should at least get us up towards the top gap there around 13 pence over the next couple of weeks. Looks as though there's been a bit of a shakeout there. We've got bullish divergence, so much lower lows for March in the price, but the RSI staying the same as it was back in October. So we're looking for 13 pence, especially while we hold above the bottom of the gap there, just under 10 pence. Best case scenario target here up to 18 pence if we have indeed got rid of all the sellers who have been around since the middle of January. Good news today, or constructive news today from Oracle Power. Here we've got bullish divergence there for the lower lows for March, but higher RSI trace. We also got an island gap reversal, so we gapped down, then we gapped up today. We can hold above the gap around 0.17 pence, then we should be looking towards the 200-day moving average around 0.25. That's been the 200-day line has been the block on progress over the last year, so having that as a target seems to be in order while we hold above 0.17. Onto a stock which has been rehabilitating itself quite well in the recent past, Oxford Cannabinoid, and here we had a target there at 1.4 pence, which we narrowly missed yesterday, but today we managed to get through to that area. The high so far today just under that, and at least hitting that line there from back in May, above 1.4, looking for 1.8 is an upgraded target there on Oxford Cannabinoid. This stage only well below recent resistance, rather at 1.1 pence, really delaying the upside scenario. Looks as though there's been a re-rate, or there is a re-rate going on at that particular situation. On to a stock which had a good slap, even though it had great news from the FDA, but might be that Polarean is finally tearing itself around. We've got a trend line break there from last month versus 28 pence, 29 pence, and above that on an end of day close basis, looking for the shares to perhaps head up towards the 40 pence area, which was resistance on the way down. So that looks rather interesting. I wouldn't say it's bullish divergence, but the RSI remaining relatively flat on this last dip, even though the shares went much lower. At this stage, only well below the 25 pence area, new lows, really questioning the idea of a turnaround on the Polarean chart. Moving on to a stock which seems to be rather stubbornly staying where it is. Here we've got Reabold remaining above the 50-day moving average, which is still rising at 0.22, while we're above that looking for 0.28 at the 200-day moving average, a bit like Oracle. The 200-day line has been the resistance for the shares in the recent past, but we have an unfilled gap to the upside from last month, and we're holding above that. So ideally, we get up to the 200-day line on the next sweep to the upside. Stock which seems to be getting hit a little bit in terms of the rumor mill is San Leon, but so far we've held that support line there from July at around 24 pence. That's the key there. We want to stay above that on an end of day close basis. If we can do that, then ideally the shares will be able to head back towards the area of the 50-day moving average, currently at 32 pence, just managing also to hold that RSI uptrend line, which has been in place since back in July. Stock which used to be in a range between 0.5 and 0.8, that sort of thing, is Tomco, but now we've got a new range, I suppose 0.25 to 0.45, top of the gap there at 0.45, but we've got a rising 50-day moving average, and we've had an unfilled gap to the upside today, That suggests that while we're above the 50-day line, we should at least head up to the 200-day moving average at 0.41. That's that area, well, that feature has been the resistance for the shares since the summer. So ideally, we have a break through that, and then we're heading back to the old support area, becoming new resistance around 0.5. While we're above 0.3, looking relatively stable. Going on to a stock which hopefully will find support at the current area. Here we've got a support line there for Tirupati from July, running down just below the 30 pence level. That's the key level for the shares. It looks as though that is a natural support for the shares, apart from the overshoot that we had back in July. If we can hold 30 pence, then it could be back towards the 200-day moving average in the 40 pence area over the next few weeks. Stock which is finally starting to get moving in the right direction is Thor Exploration. Here we've got a rising trend channel from back in February last year. Floor of the channel there around 15.5 pence. Top of the channel there up to 22 pence, and we're looking for 22 pence as soon as the end of next month, now that we've broken above the 200-day line at 16 pence and broken that line of resistance from this time last year around the same kind of level. So let's see if Thor finally breaks out. Finishing off with Ura Holdings, where there's lots of emeralds, but the share price seems to be relatively stubborn in terms of movement. Here we've got a rising trend channel from this time last year. That's heading towards 4 pence, and while we're above the old resistance and the 200 and the 50-day moving average rather at 2 pence, looking for 4 pence over the next 1 to 2 months. It all depends really on where the shares will turn around after that little dip from 2.5 pence. But we've got an uptrend line in the RSI window. That's still just about holding, so 2 pence should be the support zone there for those shares. That's it from me today. More updates tomorrow.